Good afternoon, everyone. Invest the Rest here. Thank you for joining me again on my new YouTube channel that really is focused on covering a wide range of financial investment strategies, all the way from growth accounts that have low to medium risk, all the way up to, more volatile, high risk accounts that focus on cash flow, income, and high yielding ETF dividend payments. Quite the week in the market so far. We're only 2 days in, and today's a really good video, not in the sense of how much we've made or how far the accounts have come, but to make a very important differentiation, in my opinion, between capital loss and unrealized capital loss or capital gain and cash flow. Okay, I do track both during my accounts to show what the total net gain or loss would be at any given time if the account were to be liquidated. But if that account is not liquidated, there's some interesting advantages in my mind of the cash flow from dividends. So today we're going to go over the $10,000 high yield ETF dividend account that was started on January 2nd, 2025. Before I get onto the details that you see on the screen here, obviously I'm not a financial advisor. This is not financial advice, and my videos are for entertainment purposes only. This is really just a summary and updates of my own financial journey. So if we take a look at the table here, yeah, if you've been following the market this week, it's been quite a downer. Last Friday, really, it started on Thursday. The stock market decided to jump off a cliff, and it's been pretty much exclusively red since. Hopefully Wednesday, tomorrow, it turns around. At least Thursday morning, maybe the earnings from NVDA will start to lead a comeback in the tech sector, but that is still to be determined. So if you watched my last dividend video, you know that this account was almost even on capital gain and loss, right? That is, I think we were down about $20, $30 in capital loss in this account. That video was just last week. On a $10,000 account, my investments, the portfolio in this account is now showing a $1,500 capital loss. Now, that's a hypothetical loss. If I were to sell all of my holdings today or tomorrow, I would take a $1,500 capital loss. As you can see, pretty much everything is in the red except for SMCY and PLTY, although they don't have much farther to go to also yield a negative capital loss. The biggest losses right now are coming from SQY, down $321 versus where we bought. We bought at $18.47. It's currently priced at $12.63. We also have MSTY, one of my favorite funds with a very high paying, consistent dividend every month, but currently showing a $308 loss. $19.74 is the current price. And we bought in at the beginning of the year at $27.44. I think $19.74 for MSTY is a fantastic deal. If I had more money in this account, personally, I would be dollar cost averaging and buying more of that. The same with NVDY, showing a $170 loss in capital gains or capital losses, right? It's not real yet because we haven't sold the shares, but if we were to sell all 45 shares of NVDY, we'd lose $170 because we bought in at a $23.63 price, and the current price is $19.86. I think everything right now, if we go down through this list, even GUI, right, the Yield Max Google option trading strategy ETF, we own 70 shares. I think $13.35 is a really good deal for that fund. Coney, Bitcoin's down. The whole crypto market has also taken a little bit of a tumble. $9.74 for Coney. Previous years, because I've watched Coney for a little while now, that has seen much higher prices for that fund. QDTE, I do want to take a look at that, only because that's been a very stable fund in the sense that We bought for $39.92. It's only at $38.51. Granted, we only own 13 shares, so we're only down $18 in capital loss. But I do like QDTE for its stability in ETF price. It hasn't taken as much of a hit as has the rest of the market. You can see here it's only minus 1.71%, and that goes, that's a result of how QDTE's strategy is a little bit different than the other funds. SQY down 25%, MSTY down 12%, Coney down 13.06%, and Maxi down just under 15%. As I said, SMCY, PLTY right at that 12-18% in the positive still, but minus or negative $1,500 overall if we were to sell today. Now, that's a negative. Well, let's go over the dividends first. Dividends to date, $909.52. And this is where I want to make the differentiation between dividends and capital loss or capital gain. Whether I'm $1,500 down in capital loss or $1,500 in the positive, that's not liquid, right? That's not money in my account. The $909.52 is money deposited directly into my account. That money can be reinvested or withdrawn and used to spend on paying bills, something I want to buy, or any other investments that I may be interested in. In my mind, right, that money is real money. Granted, right now, this account is an overall loser if I were to liquidate, but I'm not looking to liquidate, right? I'm looking to hold these funds and continue to earn those dividends. And as the stock market goes up and down over the long term, I'm hoping that that capital gain, that capital loss number will pretty much hover. Bad days it'll be very low, good days it'll be very high, but I'm hoping it continues to go back and forth over that $0 mark, right? Because the goal and the strategy of this account isn't to have capital gain or loss. That's not what I'm invested in these funds for. I'm invested in these funds for the monthly cash flow, the monthly dividend payments. So at the end of the day, 3 years from now, for this account, as I continue to grow it, if that capital gain, capital loss column or total is right at zero, that is perfectly fine with me. Actually, that would be the ideal situation, that total is at zero and all I have in the positive is the dividends earned. Because once those dividends are deposited into my account, they can't go down, right? This total value here for dividends overall in column H, it can't go down. And that's the thing I like about it, is you can always lose capital gain, capital loss, but you can't lose your dividends once they're paid to you, unless you spend them, right? Or unless you reinvest them into something that then goes down. But once they're in your account, you really can't lose that money. So overall, we're down about 6%, right? If you include the capital gain, capital losses, and the dividends earned, we're down about 6%. That's not huge in my opinion. I think 6% fluctuation, especially considering the performance of the market lately, that's not too bad. And we're only 2 months into this investment strategy. So, I think we have a long way to go and I have a lot to learn and a lot more to see. Now, I am going to scroll down here to the February total for dividend payments. We did have one announcement yesterday. Maxi, a very stable fund, typically pays more in the end of the year instead of the beginning of the year. So that 10 cents per share dividend payment is not unexpected in my opinion. I have 30 shares and so I got a $3 dividend payment. It's small, it's a small payment, but every little bit counts for February. The total, $375.69. Trying to get to that $533 mark in January, and obviously the overall goal of the 675 benchmark that we set based on December performance. But again, I look at this account February 2025. If I were to get to $425, $450 in dividend payments, depending on what NVDY and PLTY, normally high-paying funds, depending on what they pay, we might get up to $450. But if I got to $450 per month, like I said, some months are going to be low, some months are going to be high. Obviously, February is going to be low. The market has been garbage. It's been a very bear market. I hope that trend turns around. But I invested $10,000. I'm 2 months in, and I'm still earning, if I were to get to $450 in February, I'm earning 4.5% per month. Many savings, checkings, mutual funds, they'd be lucky to pay that in a year. Now, the last couple of years, obviously returns have been quite a bit greater than that. But on average, I think if you're getting somewhere between an 8 and a 12% return on your money on a medium risk portfolio, that's really good if you're getting 8 to 10% a year. And in this account, I'm getting 4.5% per month. Again, I'd be a loser. This would be a loser. The portfolio would be negative overall if I were to liquidate today. So obviously when you make your exit strategy, when that time comes, you want to exit this type of portfolio when that capital gain, capital loss total number is much closer to zero. And that would be the goal if I ever did shift the strategy of this portfolio into something else. I would try to exit or try to slowly get out of these funds when their capital gain is in the positive. So that's really the update. I wanted to make that differentiation today. The difference between cash flow and capital gain. Cash flow could be important month to month if you're using this money to pay bills or invest in something else. You get that money. That money is in your pocket, and you don't have to wait to sell or buy more shares for that number to change. That number pays every month. Now, the dividends that these funds pay, if we look down here in February, the beginning of March may be lower payments because these dividend ETFs will pay lower in a bear market. They'll still pay a dividend, but the dividend per share will be lower. So your cash flow will go down. Now in a bull market, your cash flow will go up, right? Maybe you hit that 675. Maybe I'll hit that 675 in April if the market makes a correction and these funds have a nice steady bull market to trade in. Their dividend payments in April or late March could be very high. You just don't know, but you can expect lower dividend payments in a bear market, higher dividend payments in a bull market, and that's just the nature of these funds. But we were up almost 8%. We're down, now we're down 6%. So a 14% swing. That's why this type of investing, these funds and this portfolio, I consider high risk. The swings, the volatility, it's tough to manage that if you are, you don't have a lot of time, or you're really tight on your, overall investment bankroll, or you're really worried about, needing to liquidate the account at a moment's notice. This probably isn't the investment option for you. Me, I can let this sit. I'm going to let that capital gain sit in there. I want to see what it does, and I want to continue to collect that dividend. In my opinion, in my strategy, the idea is that over time, these funds, the price of these funds will go up slowly, but they will go up with the rest of the market. So that's the update today. I did an option video. If you want to check out the $10,000 option account, quite an interesting update there as well. Check that out. I posted that last night. This is the $10,000 dividend account, and then tomorrow we'll take a look at the $10,000 growth account. Overall, the three accounts, they're down, as is most people's investments. But like I said, NVIDIA, NVDA comes out with earnings tomorrow. Maybe that'll start to turn the market around a little bit, but we will see. It could be another bear day. It could be another day in the red, but in my opinion, eventually it has to course correct. So as always, everyone, drop me a like, a comment. I respond to all my comments. Subscribe to the channel. Share this video with your friends, your family, if you thought it was interesting. And you'll be notified. If you subscribe, you'll be notified of new videos, new updates. And as always, everyone, thank you so much for watching. I will catch you on the next one.